Welcome to ForexTV.com. Today is Friday, January 9th. I'm Kathleen Reddington with your New York Forex Market Buzz. The dollar gains on the euro after a better than expected jobs report. And now for a look at the latest headlines from the CEP News Desk. The U.S. economy shed 524,000 jobs in December. For the second month in a row, it has seen job losses that have been more than 500,000. The consensus forecast called for a loss of 525,000 jobs. The unemployment rate soared up 0.4 to 7.2%, the highest since January of 1993. Adding up the 12 months of losses, about 2.5 million jobs were lost in 2008. December marked a second straight month of job losses and rising unemployment in Canada. The country shed 34,400 jobs and saw its unemployment rate climb to 6.6%. Industrial production in the UK came in below expectations, falling by 2.3% from October to November, more than quadruple the 0.5% decline expected. Today we are joined by Dave Floyd of Asen Trading Group. Hi Dave, how are you today?
I'm doing fine. Yourself?
I'm doing well. So the non-farm payrolls weren't as catastrophic as people were expecting, and this caused the dollar to rally after slumping yesterday. The news was still that jobs hit an unemployment level at a 15-year high for 2008. I want to know what your dollar strategy is for today, and could this rally on less bad news be turned around?
You know, I think that what we're seeing right here is a technical bounce, as analysts like to refer to it as. I don't see the downtrend in the dollar being broken. I suspect we might see, the dollar rally a little bit more into early next week, which should give us a good opportunity to pick up the euro, perhaps around the 134.60, 134.50 level. I'm not convinced at this point that the dollar is about to embark on a new leg higher.
All right, and you mentioned like a technical bounce. We saw equities rally at first on the not-so-bad non-farm news, but now they've sunk back down. What do you think is moving equities today?
Equities have been really interesting lately. I was talking to a colleague earlier today, and it's difficult to kind of ascertain if equities are driving Forex or Forex are driving equities. The relationships aren't quite as clear. I think the difficulty that equities are having at this point in time is whether or not the worst is behind us. You'd indicated the job numbers weren't as bad as they had thought, but the revisions certainly were. So I still think the equity markets are having a hard time timing the inevitable recovery in the economy, and I think as a result it's just keeping the equity markets in flux until maybe more definitive economic data appears.
All right, and the ECB is coming up on a rate cut next week. How do you think they'll move, and does this affect your trading strategy for the euro?
I'm definitely cognizant of what the ECB may or may not do. I'm not entirely sure what they'll do. I can't imagine that they won't cut. But I try not to let that impact me too much. I try to be more price action driven. So unless they come up with something dramatic that we weren't expecting, like maybe a 100 basis point cut or something extreme, it won't impact my forecast, at least unless we see a dramatic change in what the policy is expected to be.
All right, and it seems like oil is headed for a big slide on the week after perking up a little bit after the new year. We've seen commodity currencies take a pretty wild ride, and the CAD fell to the dollar yesterday. What do you see for dollar CAD?
The dollar CAD's a tricky one, and I do follow it, but I don't follow it as close as some other currency pairs. But what I would say about the dollar CAD is, yes, it is of course commodity sensitive, and any sort of major increase or decrease in commodity prices will impact the Canadian dollar. I think, though, that the Canadian dollar might be in a better position relative to the U.S. dollar. From a budget standpoint, the Canadian economy is certainly in a better standpoint. Yes, they are negatively impacted. They're our number one trading partner by our weak economy. But currencies, as you know, are a game of relatives, and I think between the dollar and Canadian dollar, the Canadian dollar is probably, in better shape overall, or as I say, the least ugly of the two.
All right, Dave, thanks so much for joining us today.
Thank you. Appreciate it.
This has been your New York Forex Market Buzz with Dave Floyd of Asen Trading Group. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.